Hello traders, Gary Wagner here just before 11 o'clock on Tuesday, the 17th day of December 2013, and this is the daily report for gold and silver. We do have lower pricing across the board in the precious metals markets. Currently, we are trading off about $9 on the day in gold, 1230, 1231. It's kind of ranging back and forth between that. The low 2730 and the high 49.10. Now, we're also trading lower in silver, but it's only off about 8 cents on the day. It is below $20 though, currently trading at 19.86. It's had a low of 61 and a high of 20.34 on the day. You know, we have two major influences right now really moving or not moving, I should say, the market. The first is that the last FOMC meeting for the year that has started today will conclude tomorrow. So traders are anxiously awaiting to hear what kind of news comes out, whether or not tapering will begin this year or whether or not it will begin next year. The other thing that we've got is as we go into the holiday season, of course, we're going to have volume getting lighter and lighter. And because of that, we're going to be susceptible to greater swings if the market does swing, and that will be coupled with prolonged periods of quietness or inactivity. So you're going to get a quiet market, maybe a big spike in a quiet market. Now, as to the market today, let's take a look at this. We've got a 60-minute chart, and we have created basically, as we said yesterday, two different fib retracements, one that goes down to the 1211 low, the other one that goes down to the 1225 low. So when we do that, we get our zeros here, of course, and our zeros here, and we're going to get our 50% collectively in these two areas. Now, what we have seen because of that is that we've identified really a pretty strong area of resistance here. We hit it here yesterday, market came down, but we've also identified, I believe, a pretty strong area of support. And there's no doubt that as this market came down, this is 1225, it actually, as you can see, hit this low in this area and now appears as though it's bouncing up a little bit. Now, it would not surprise me, as we talked about yesterday, to really see this market trade within this range. And so what we're getting a series of highs and lows that are either lining up with 1225 or in this case down here, 1211 in terms of the top. The majority of the tops are kind of peaking out at 1252. However, we did have this one top that just raged over the 1260 area, but not for long, came right back into alignment, so to speak. And now we're, again, trading within the range back down to the bottom of the range. What would I look for? Well, I would personally think that it will probably track in between this particular range as we await news to come out of this last FOMC meeting of the year. We're looking at a 240-minute chart, straight candlestick format. We have been identifying certain candlestick patterns that we're seeing even on the short-term charts that kind of define the range. So, for example, we pointed out this series of dojis up here, and we also pointed out that we had a variation off of a three-river evening star. Reason we labeled it a variation, it pretty much meets all the criteria except that it has two stars gapped in between the green and the red candle. But you can see that it was a real valid call because this is right prior to the market, which was trading at roughly 1255, coming back down and making these lows at 1211. Now at 1211, we can really not see a whole lot of patterns. You get, though, this whole cluster or series of dojis. Now, the series of dojis, as we've talked about on many occasions, can indicate two things. On a market that's been dropping, it can indicate a simple rest area before it continues and drops more, or it can indicate a key reversal, but it's certainly a point in which the market consolidates. Now, you get some crazy activity as you do here, because although you get these small body candles, you get some points where you've got this tremendous range in the market, but yet it kind of settles down in a very, very close proximity to where it opened. You do get an engulfing bullish, you do get confirmation here, but you had so much noise that it would be hard to differentiate it until it really broke above these series of tops right here, and that would be telling you that you had a pretty good indication. We talked about the fact that we had a three-river evening star, and that's right in here, and that was a precursor to this market moving down. And once again, as it hits the bottom, we get this cluster of doji. So there are signals, there are candlestick patterns that help guide us in terms of where we think short-term range is going. Of course, we are flat in the market. And really until the conclusion of the FOMC meeting, and as we settle down through the end of the year, we will lighten up our trading. We've had a great trading year. We've made about 160% profit, this all in light of one of the single greatest declines in the price of gold, in which it went down over 25% in terms of a loss in value. So I'm very, very satisfied with our performance, but I don't want to really get whipped around. I want to get a real firm idea of what we think the market's doing. And to get that kind of view, of course, we have to start going out to our outer charts. But before we do that, I do want to look at our 720-minute chart. And as you can see, I've pulled up our 720. And really what we can see here more than anything else is really this range that the market has been trading in. We can see where it has broken out of the range, but if we define a couple of different parameters, meaning 1257 on the top, and we take a look at these bottoms, this of course is 1211, this is 1223, the vast majority of trading, call it since what, about the 15th of last month, has been within this defined trading range, very, very quiet trading range. Now we have broke above and below it. Here we break a little bit above it. Here we break a little bit below it. This is the 1211 low. This is the 65 high. But when you take out these extreme highs and lows, what you can see in this market is really, for the last month, it's just been trading in this defined very, very narrow range as it attempts to see if it wants to form a basin move higher from here or if it's going to move lower from here. And again, for those, we really want to pull up our long-term charts. Now, I do want to take a look at our longer-term charts with two different charts. This Japanese average format, but that's not what is important in this chart. This chart, of course, is a 3-day chart. Let's see if I can't kind of put this in so we can see the beginnings of where these fib retracements come from, and I might really have to compress the chart. But as you can see on this particular chart, I have started our fib retracement down at 400. I'm looking at this entire rally here, and then on this particular chart, we're looking at it from about 650 all the way up. And then lastly, this is going to be 672 right in here, if I'm correct, or 672, excuse me. So we have three different fib retracements. The short one is here, middle one is here, the longest one is 1141. And so what I'm attempting to do on this is look at genuine longest term support levels that I can find. Of course, we have this current print of 1231. We have 1229 as being a 50% retracement, and that is a retracement from this move at around 550 right here. The two lines that line up here, 50 and 61%, are absolute critical lines in the sand. They're 1141 is where it ends up at. This is that low at 1181. So my sense is this: if the market does continue lower, I would expect it to finally resolve its fifth wave here, no lower than 1141, and then move into an ABC. I believe that these two areas that we have defined here are pretty critical areas in terms of absolute support. And with that in mind, we can then look at our current Elliott wave count. So as you can see, I've pulled up our 3-day chart, but this chart, of course, has our current Elliott wave count. Again, the 61%. On our other chart, it sits at 1146. This is at 1154. So we're very, very close. These are those lows that we looked at on that very last chart. And as I said, my sense is this: we currently have 1, 2, 3. I would expect a fourth and a fifth, I would expect a termination above or at 1150, call it, and then I would expect to go into our A, B, and C. In terms of where the A, B, and C are going to go, we started to plot that, and we'll be doing that throughout the week and a little bit next week. Realize that we will go into our annual Christmas vacation. We do limited reports between Christmas and call it the 3rd of January. I am monitoring the market, but I am also on semi-vacation, let's call it. It's when I recharge, re-energize, and get ready for the next year. Now, the other model that we have been looking at in terms of the way that this could go is we have our long third, our fourth, and our fifth is truncated with fairly equal lows, and then we go into our A, B, C. Now, the difference on this is if we're starting from 1230 as opposed to starting from 1150, it gives our upside target a little bit more room to the upside because I'm still going to do a fib retracement that looks at the lows and the highs. In this case, we would be looking at this particular area, 1800 down. We would look at, of course, a 23% and a 38% retracement. And that's exactly what these lines are here, 1302 and 1397. And that's to say that once we terminate or conclude our fifth wave, and I think that we're either very, very close, or in the case of a truncated fifth wave, what's called a bear market truncation, we've already seen the lows, but in either case, whether we're very close to the lows or we've already seen the lows, I think that once we get confirmation of the upside, we are going to see a good $150 to $200 rise off of the bottom in the current price of gold. Now, traders, we are looking at a daily chart in silver. I've got one basic fib retracement in there. It runs from approximately $23 down to approximately $19, $18.90. Obviously, real resistance at 2051. That is the real resistance point. I am pegging our current support at 1258. Unlike gold, which has really been range bound, we did come up, we made this new high, we came down and we found some support, which is really above these most recent lows. We'll have to see how it reacts, but again, what I'm looking for is really a wait and see attitude as we await to see what comes out of the FOMC meeting tomorrow. And in terms of our current support and resistance levels, short term, these are them: 2051 resistance, 1958 support. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.